Indonesia has pledged to phase out coal, but behind the scenes, its domestic banks are doing the opposite, pouring billions into fossil fuels that threaten to derail the country's climate goals. As foreign investors pull back, local financiers have become the lifeline keeping Indonesia's coal industry alive. This is the story of money, power, and denial. Indonesia is one of the world's largest coal producers and one of the few countries still expanding its coal fleet. Between 2021 and 2023, domestic banks provided over $10 billion in financing to coal power and mining companies. Major lenders such as Bank Mandiri, BNI and BRI continue to extend credit lines to coal developers, despite public commitments to sustainability. Foreign banks, under increasing climate pressure, have largely retreated from coal, but Indonesian banks have stepped in, propping up an industry the world is trying to abandon. So why won't they quit coal? The answer lies in profit and politics. Coal remains a cornerstone of Indonesia's export revenue, and many coal-linked companies hold strong political connections. For domestic banks, lending to coal is safe, familiar, and lucrative. Meanwhile, renewable projects, especially solar and wind, are still seen as risky investments, hindered by slow permitting and weak policy incentives. This imbalance in perception has turned Indonesia's financial system into a barrier against its own energy transition. The cost of inaction is mounting. Continued coal financing locks Indonesia into decades of carbon emissions and stranded assets. Analysts warn that new coal plants could become financial liabilities within 10 years as global demand shifts toward clean energy. For Indonesia's banks, this means exposure to rising transition risks, investments that may soon lose value as international climate standards tighten. In short, they're betting on a future that no longer exists. Experts say change is possible, but it requires stronger regulations and financial reform. Indonesia's central bank could integrate climate risk assessments into lending rules, while green taxonomy frameworks could redirect capital toward renewables. Some banks have begun to adopt ESG principles, but without transparency and measurable targets, these remain more slogan than strategy. Redirecting finance from coal to clean energy isn't just environmental, it's economic survival. Indonesia's banks face a choice: keep funding the past or invest in the future. As global capital moves toward renewables, the country risks being left behind, trapped by its own financing system. The world is moving on from coal. If Indonesia's banks don't follow, they won't just lose credibility, they'll lose the future of finance itself.